We had modest losses on Wall Street today as the S&P 500 was down 0.34%. All in all, it was a pretty quiet day where we're kind of waiting for a little bit more volatility tomorrow, if anything else. Tomorrow is the first Friday of the month, and as most of you are aware, that's when the employment report comes out. And right now, the expectation is that about 20% unemployment rate is going to be floated out there, and how the market reacts to that is anybody's guess. Thus far, we've seen that the market has handled most bad news in stride, but you always have to remember that that can change in a heartbeat. So we'll see when tomorrow comes out, but for right now, most of the trends do remain bullish in the United States. I did want to focus on one particular trend that was happening below the stock market surface here today and focus our trade application on a stock within that particular theme that's breaking out as of today. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's June 4th, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe, check out our description area, sign up for our email distribution list, which entitles you to receiving notifications when we post these videos, and also gives you a heads up on any stocks in the S&P 500 that are giving you overbought and oversold cluster signals. In addition to that, we're heavy users of Twitter. My handle is @BrandonVanZee. If you appreciate the effort that goes into producing these free videos for you, we would encourage you to click like. That's your way to vote as to you wanting us to do these videos daily if it's available. And of course, we also have a presence over on Facebook. Feel free to join us at the web address embedded in that logo there in front of you. All right, let's go ahead and jump into our charts now. And as you can see, I've got chart 4B pulled up here in front of us. The S&P 500, as mentioned before, was down slightly today. It was down 0.34%, so not a very big day. In fact, you can see these daily range labels that are posted on all four of these charts are all blue today, telling us that we did not have a wide amount of volatility from high to low in today's price action. It was a pretty quiet day, all things considered. You can see that all of our charts remain in bullish uptrends. We do have that green, that dark green background color on all four of our charts, reminding us that we have strongly bullish intermediate postures according to the market forecast technical indicator. In addition to that, all of our moving averages are also green, telling us that price is above a rising moving average, and therefore the path of least resistance continues to be to the upside. We almost had a couple of bullish intermediate confirmation signals here. We just missed by a hair at the end of the day. You can see here that the S&P 500's red line, the momentum line, closed right down here at the reversal zone, but didn't quite enter into it. It was at 22 at the end of the day. Remember, it has to go below 20 for that. And a similar situation down below with the NASDAQ. It ended at basically 21, and again needs to get down below 20 before that signal lights up. So we almost had it, but not quite. It is worth noting that the NASDAQ did underperform again here today. Those tech stocks are kind of taking a little bit of a breather, and we did see Slack report after hours here tonight, so ticker symbol WORK, and that stock was down significantly after hours. That had been kind of one of the more exciting tech IPOs of the last couple of years. So it is possible that the tech stocks kind of start off on a little bit more of a sour note in the morning as a result of that. And of course, as I mentioned before, we've got the unemployment report that could come out and change the tune for the entire market one direction or another as well that we have to be aware of. So our lagging index today was the NASDAQ. Our leading index was the Dow Jones. It was up just a hair. The Russell 2000 was basically flat today, but the Dow Jones was up 0.05%. And Boeing has been kind of taking flight, whatever that pun may be for that airline manufacturer. Boeing's up about 40% in the last month, so really trying to make a go of things there. And of course, Boeing is one of the most important members of the Dow Jones Industrial Average, which is a price-weighted index rather than a market cap-weighted index like most of the others that we see here. So anyway, things are pretty much the same as they have been, which is we had a quiet pullback here today, but stocks continue to kind of march higher over a fairly longer period of time over the last couple of months, and I see nothing right now that has changed that. This is still a market that wants to climb that wall of worry. Let's go ahead and take a look at how we did with our likes and our retweets the last time I did the video here, which would have been on Tuesday. And as I scroll a little bit lower, friendly reminder that you can click like either by going over to Twitter itself and checking out my handle at Brandon Van Zee, or you can just click like while you're watching this video on our website directly below the video itself. And it looks like we missed our mark of 100 likes there. We came in a little bit shy at 93. I do appreciate the 93 of you that did click like, but we didn't quite get to that goal, so let's keep tonight's video on the shorter variety here, short and sweet. Remember, if you want to vote for a longer video, simply click like. If you prefer these shorter videos, then don't click like, so it makes it nice and easy there for you. Also, while we're over here on the internet, did want to show you our factor selector tool that I often use for my swing trading classes. And I wanted to point out something that will kind of be a theme in tonight's video, which is, first of all, this was made 2 nights ago, so it's a couple of days stale at this point, but it's basically tracking the different factors and any rotations that might be taking place over time, and it looks at it on a once-a-week basis. Basically on Tuesday night is when I take the statistics in preparation for my class on Wednesday morning. And one thing that we noticed the prior week was that momentum, after kind of being a leading area of the market, number one on this graphic for 3 straight weeks there with that green ball up there at the top, did slip from number 1 to number 2 last week and continued to be number 2 this week. Now at the exact same time, notice this brown ball down below where you had value that was second to last on the graphic for 4 straight weeks, and then last week went up to the number 4 spot, so it went from number 5 to number 4 and maintained that spot this week. So in fact, all of our rankings were exactly the same week over week, which is a very rare thing to occur. But nonetheless, the point holds that momentum has been slipping a little bit lately. Value has been ticking up a little bit lately. And those of you that follow me on Twitter may know that I was tweeting about that here both yesterday. Here was my tweet from yesterday talking about that very thing, and then here was my follow-up tweet today, kind of recognizing the same thing happening 2 days in a row where value is outperforming momentum. And remember, that had been a fairly rare occurrence in recent months. It has typically been a market led by momentum, and value has kind of been left out of the party. That is all changing, at least it has been here in the more recent time period. Whether that change holds or not is anybody's guess, but right now there is a change that is taking place. Another way to kind of visualize that as I come back over to the Thinkorswim platform now is by coming on over here to chart 3D. For those of you that are premium members, remember you have access to all 50 of the charts that David and I use, and I've actually got a couple of really exciting new charts that I'm working on right now with the assistance of one of our members, Mike Emerson. And it's really exciting stuff that I'll probably be posting here within the next couple of weeks. So I'm still working on it. Stay tuned on that. But just a friendly reminder that if you are a premium member of Market Scholars, you're entitled to all of these free charts here that we send your way on our website. So 3D is the one that I wanted to bring up right now to kind of give you a sense of what's been happening from a factor perspective. And as you can see, this chart in the lower right-hand corner is the value factor. Notice that it is hitting a 1-month high today, and it closed really at the high of the session. This is really combining 4 different value funds together to try to get a more well-rounded experience, so that way it kind of eliminates any one fund noise. So this is telling us that from a theme perspective, this is looking very, very strong. This is actually the 4th straight day where this particular factor of value has closed basically at its highs of the session and is now trading at a 1-month high. Now compare that to the chart directly above it, which is momentum. And notice that momentum fell pretty aggressively today. Momentum was down 1.2%. Remember, the S&P 500 was only down 0.3%. So momentum was clearly a relative laggard here today, whereas value was up 1.49%, clearly a relative winner today versus the general stock market. And you can see that that transition is kind of taking place in a couple of other areas that I'll point out as well, which is the size factor has started to pick up some steam here recently. So those are more of your low size category stocks. And then in the upper left, you're seeing that the dividend yield factor is finally starting to come to life a little bit here over the last 1 month as well. So it's interesting to note because a lot of folks haven't really been concentrating on those areas so much. They've been more excited about kind of the cloud computing plays and some of those software stocks, a lot of those FANG names that have been doing so well over time. Well, if we look at a 1 month look back basis, you're now seeing that momentum is only up 7.78%, whereas you're looking at the dividend yield factor up 10.7%, you're looking at the size factor up 15%, and you're looking at the value factor up 15%. So there's been a little bit of a transition that's taking place underneath the surface of the market, and we want to make sure that we're doing our best to help you identify that, whether you're following David and I on Twitter throughout the day or in our classes, like my factor-based swing trading class on my Wednesday mornings, or whether you're just listening to this free presentation that we offer you here on YouTube. So keep that in the back of your mind, because that could very well mean that there are some interesting opportunities out there, because a lot of those industrials and oils and financial stocks that have been left for dead have a long ways to go back higher if some of them will eventually start making new highs once again. Another way to kind of look at that would be to come on over here now and take a look at chart 5Q, which is our ratio charts 12 grid. And while this isn't the exact same thing, it will still kind of tell us that that theme is a legitimate theme. Notice this chart in the lower left-hand corner. This is our growth stocks divided by value stocks. And the way that you would read this ratio chart is if these green bars are traveling up, that means that growth stocks are outperforming value stocks. If the green chart is going lower, that means that value stocks are outperforming growth stocks. So notice that this is a 3-month chart that we're looking at here, and for the first 2.5 months of this 3-month chart, you've seen that growth stocks have outperformed value stocks. It's really just here in the last 2 weeks where you're seeing this chart spill over, telling us that in the last couple of weeks, it's actually the value stocks that are beating the growth stocks. Now remember, growth stocks are a slightly different concept than momentum stocks. Technically, momentum stocks can be any company, whether they're growing their earnings or not, but oftentimes they are rightfully lumped in with one another because there's a lot of crossover that happens between growth stocks and momentum stocks. So this is another graph here that is suggesting that this transition into value stocks does carry some weight. There is something to this move. Another thing that I would point out is right here in the orange, equal weight divided by market cap weight, S&P 500. And notice that we have had a huge surge here in the last 3 weeks where this chart was largely going lower, and then all of a sudden right here at around May 14th, this chart bottomed and has gone straight up from that time. So it's basically telling us that the equal weight version of the S&P 500 is beating the traditional market cap weighted version of the S&P 500. A lot of you will use SPY for that traditional version, but if you wanted to look at an equal weight version, that's RSP. And right now we are seeing a massive amount of outperformance in those stocks that had been forgotten about. In other words, it's not the FANG stocks that everybody was talking about for years and years and years that's been leading this market in the last 3 weeks. It's been the kind of the catch-up trade that's been taking place. Another way to kind of identify this is if we're going to come over here to our U.S. sectors 12 grid, you can see here that the financials, XLF, was the sector that did the best today. It was up over 2% today. Utilities did the worst, actually tied about with real estate. Both of those were down about 1.7 to 1.8% down there in the bottom rung. But it was really the financials that were the star of today's market, up 2% on a day when the S&P 500 was down about 0.3%. So there's something brewing with a lot of these financial stocks. In fact, we talked about some of them today in my my question and answer session that I host for our premium members here on Thursday mornings. But if I get out my my next chart here, let's just go over here to a chart 3A to kind of highlight this. If we were to look at something like JP Morgan. Remember, in this presentation for YouTube, I about a month or so ago, I did a trade where we sold puts on JP Morgan, which was a bullish trade. And you can see JP Morgan is breaking out here more recently. One of my most successful trades that I've done for you guys in this video over the last couple of months has been Discover Financial. Remember, that was the trade that I bought speculative calls in. And we bought 3 of those contracts, the January 2022 variety, and this was the $25 call. We bought those on April 15th. So I would have talked about it in the video the night before on the 14th if you're looking back to our YouTube videos to listen to my commentary on why I selected that particular security. But I talked about a lot of things there, including a stock that's been trashed, under book value, has a long history of raising dividends, and looked like it was primed for some sort of a rebound where we could potentially make double, triple, or possibly even quadruple our money on that trade. And I'm happy to report that so far we've made well over double our money. We paid $13.50 for those contracts. They're now worth $35. So this is one that has already worked for us when I was a little bit more speculative, kind of going into a unloved sector of financials at that time. And that again would have been back here on the 15th is when our trade got transacted. So I did the video the night before there, and then we had a gap down the next day, and I got filled at an even better price than I was assuming because of that gap down that next day. So from here, this stock has gone from $33 when we got filled on our long calls to where we're at today at $58. Right? The stock itself is almost doubled. So it's been a really good run for this company and other financial companies that you've been brave enough to take kind of a flyer on, and we'll continue to let that one work for us. Those of you that choose to roll it because you've gotten to an 86 delta or something along those lines, feel free to do that. But my intention with this one is actually to hold it until 2022 and take ownership of 300 shares of this stock at a very preferential price at that time. So that leads us into our conversation now about today's trade application example, which will also be a very well-known financial company. In this case, it's U.S. Bank, so maybe not quite as well known as J.P. Morgan, maybe not as consumer-oriented as Discover Financial, but yet a very well-known entity in the financial space. And you can see, like a lot of those other financial players, this one has been taking off here recently, and we closed at the high of the session today, just a little bit above $40 per share, and that cleared above this double top resistance area that was put in back here in early April and then again in late April. Now, some of you might say, well, darn, I wish I could have bought that at a cheaper price. And by selling a put, it gives you that possibility of doing just that. So what I'm going to do here tonight is sell a put on U.S. Bank down here at the $30 strike in the month of July. Now, if this stock does reverse course, we have to be willing to take ownership of buying it down at $30. And if it doesn't collapse all the way to that price, then we merely get to keep the premium that we receive up front when we place that trade. But you can see here with my crosshairs that if we were to have the stock come all the way back down here to $30, that would be at some of those lowest levels that this stock has traded at in the last 3 months. So I'd be more than happy to take some ownership of U.S. Bank at those levels if I were given that opportunity. So I'm going to come over here to the trade tab. I'm going to come over here to the July monthly contracts with 43 days left until expiration. I'm going to go with that $30 strike rate there, which will be our 1% return on risk. The last traded price for that particular strike was at 33 cents. The bid is 29, the ask is 33. I'd like to get filled at 30 cents even. So let's go ahead and click on the sell price there. I'll actually do 3 of these contracts here, and we'll bump this up to 30 cents. And I'm actually going to put that in as a good till cancel order. That way, if I don't get filled tomorrow, I'll still have that working for me early next week. So let's click confirm and send and ship that off. All right, well, thank you for joining me here tonight. Again, a shorter video. If you prefer the longer version, make sure you go over to Twitter here tonight and click like for me. It'll be pinned to the top of my timeline. Otherwise, you can always find it on our website there as well. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.